In our ideas for profit today, I'll discuss about a maker of automotive and non-automotive cables, that is Suprajit Engineering Limited. Now, marred by the pandemic-led disruptions, the company has actually posted or reported a weak set of numbers in Q1 of FY21. However, the attractive valuations currently is what is taking our attention towards it. Now, reflecting the pain in the automotive industry or the entire industry of automobiles due to the pandemic, the revenues fell 64.7%. All the segments, in fact, reported decline in sales. EBITDA as well turned negative due to the significant negative operating leverage this time. In fact, FY20 as a whole has been a year of multiple challenges for the two-wheelers as well as the passenger vehicles industry, and there were a confluence of factors hurting the demand. But further going on from here, the COVID-19 did impact the industry, though it did also trigger massive disruption this time. But what we are seeing is that the two-wheeler as well as the passenger vehicle segment is witnessing a V-shaped recovery as the process of unlocking has started. Now, the demand recovery is really fueled by the people's preference for personal vehicles, as they really fear taking public transport because of the perceived risk of getting infected by COVID-19. Now, another trigger for the company is the increase in content per vehicle due to BS6 implementation also. Now, in the light of this, the management has indicated that it will outperform the industry in terms of revenue growth. Now, they also indicated that outlook for Q2 FY21 is very encouraging, and it will also perform or outperform the industry as well in terms of revenue growth going forward. Now, the company has also indicated now that the Q2 FY21 outlook is encouraging. Going on from here, the recovery is only begun. Also, post GST, we've also seen big opportunity for the market in the aftermarket space, and it has been focusing on expanding its presence here as well. Now, the company generates 15 to 18% of its cable business revenues from this space. The management has highlighted that the domestic aftermarket sales have also started witnessing growth, and in fact, the months of June and July also we've seen sales witnessed a growth on a year-on-year basis. Now, the management highlighted that the exports offer significant room for growth also. Now, it has marquee clients such as BMW, Volkswagen, all of those in its kitty as well. And now, for many of its clients, the company caters anywhere to about 19% of the demand in its category. Now, this could give it the opportunity to expand the business further from here. In fact, despite the weakness due to the pandemic, the company really booked new business from one of its existing customers as well in Europe. Also, additionally, many auto manufacturers are also looking to diversify from Chinese suppliers, and this really presents an opportunity for the company to really grab the space here. Now, the company is the market leader in the automotive cables with a capacity of over 250 million units. It also has about a 70% market share in the two-wheeler space. Also, in four-wheelers or say passenger vehicles, its market share has really increased from say 20% to 35%, and that's over the last 5 years. Now, the stock currently trades at 15.3 times the FY22 projected earnings, which is very attractive. Hence, the stock looks good from a long-term perspective.